Hello, everyone. Thank you for joining us on this Saturday morning, and welcome to the Specialist Trading Educational Presentation. Now, today I want to talk to you about combining the overall trend with the short-term trend. This is probably one of the most common things we're taught as traders, pretty much Trading 101. First of all, you want to be in sync with the trend, and what we're usually taught is this technique. In other words, you need the higher time frame to be in sync with the shorter time frame and vice versa. That way, you'll have more validity with the trade. You'll have more consistency. The only trouble is most traders are implementing this style or this technique incorrectly. I have a very unique and powerful way in which to combine the overall trend with the short-term trend. But first, let's look at this chart on how most traders would apply this. For example, looking at this chart in Adobe, most traders would say, well, we're in an uptrend, right? And the overall trend, let's say this is a daily chart, so the overall trend would be a weekly chart, is going up as well. So I want to buy this. So you step in and you buy, let's say you buy it on this day right here, and then this happens, right? So the short-term trend has been broken. So that means that you're now out of sync with the overall trend, and you don't want to touch this anymore. You're probably stopped out with a loss. And you're saying to yourself, wow, okay, I have another loss here. This technique is not working too well for me. Well, I'm going to share with you a rather simple way of combining the overall trend with the short-term trend, because with this simple technique, with the two rules I'll share with you today, you would have actually known that, yes, indeed, you were in an overall uptrend. The trend was up. And at the same time, even though you may have gotten stopped out on this trade, the short-term trend was still up as well. So with these two different requirements, you would have actually seen that both trends were in sync, and you should have been looking for a buying opportunity, which actually presented itself right here, because as we see later on, the stock went up 30 points in the next week. So this is a really simple but powerful way to determine the overall as well as the short-term trend. And I know a lot of you would say, well, gosh, Steve, that's difficult for me because I've never been really good at looking at charts or looking at this kind of technical analysis. Well, I teamed up with Pro Trader Strategies with this one purpose in mind, to actually make trading simple. Therefore, we developed the PTS Primo charting platform. This is an educational platform that really teaches you how to be consistent, and it makes it really simple because everything is just one click away. And you'll see that today because all the examples and all the charts I'm going to be sharing with you are by displaying the PTS Primo charting platform. So welcome once again to our Saturday presentation. My name is Steven Primo, President and Founder of Specialist Trading. I teamed up with Pro Trader Strategies about 12 years ago with one goal in mind, and that was simply to educate traders. We really are not here to tell you what we think the market's going to do. We're not here to tell you what our belief is and what the presidential election is going to have in store for the markets. We're not here to tell you what we think the best time frame is, or what we think the best stock or future or currency pair to buy or sell is. In fact, the reason why we don't do that is because we don't even look at that ourselves. I mean, I really could care less anything about fundamental news or economic indicators. I really don't look at any news. I don't look at any volume or all the traditional technical analysis. I only look at one thing, and that's the chart in front of me. Because in my 43 years of trading, that's really where I get all the answers. Now, it wasn't as if I started trading this way. I first started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist, meaning I made markets in roughly about 50 or 60 stocks. And my first year or two, I struggled tremendously because I was doing the same thing that probably most of you are doing right now. Looking at fundamental news, looking at earnings, volume, listening to the guys on TV or in the chat rooms. And it really didn't provide me with a lot of, consistent trading. And sure, every once in a while I'd have a nice trade, but then I'd give it all back. My mentors taught me that these things are really not there to help you. All the traditional wisdom we've been taught, they're really standing in your way to success. So it was a hard concept for me to grasp. In fact, I really didn't grasp it at first. I ignored it. I said, this can't be right. But I continued to lose or continued to falter my trading. So ultimately I gave in. And once I did, and I started releasing all these things that my mentors called noise, that's when my trading started to become consistent. And one of the first things they taught me was this concept I'm going to be revealing today about combining the overall trend with the short-term trend. So once again, we are first and foremost an educational company because we simply want to educate you so that you can be in charge of your own trading decisions. That's our goal at Specialist Trading. You'll see that today in today's educational presentation. But before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only, since we are first and foremost an educational company. Now, if you'd like to get some more education on a daily basis during the trading week, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down. Every day I post different information, anywhere from signals our strategies or techniques have generated to little bits of financial wisdom along the way. So there's lots of great free educational information. Please feel free to follow us on Twitter. Now remember, once again, as we stated in the opening statements, we're only here to educate you. That's our only goal, because someone would say, well, why don't you just tell me what you're doing? Okay, why don't you just tell me what you're buying and selling? Because once again, that's not our goal. That actually stands in the way of your success. Think of how you make your trading decisions. Do you go to a chat room or to a trading room? Do you, have a signal service that you subscribe to or pay for? Do you listen to the guys on TV tell you what to buy or what to sell or what they think the market's going to do? Each and every one of those sources is basically telling you what they think the market is going to be doing or what some particular stock is going to be doing. And when you follow along, what you're basically saying is, I don't know what to do. I don't have enough experience. I don't have enough knowledge or know-how. I'm not educated enough, so I'm going to allow you to make my trading decisions for me. I mean, that is, in my opinion, the silliest thing in the world, but unfortunately, I did the same thing when I first started trading, okay? So that's what most traders are trained to do, to listen to someone else tell you what to do. Now, there's nothing wrong with being educated by someone, but ultimately, you have to make your own trading decisions. So that's our goal as educators, not to trade for you, not to tell you what the perfect system is or what the perfect market is or what time frame that you should be trading or what the market's going to be doing next week, but to teach you how to trade so that ultimately you can make your own trading decisions. This is the way I was taught when I was first learning from my mentors, and trust me, I said the same thing. I said, why can't you just tell me what you're buying and selling, and I'll piggyback off of that. But they said the same thing. You have to learn your own way because that's the only way you'll be consistent. We might like to trade 50 times a day and you might like to trade 2 times a day. So it wouldn't matter, if we're successful. Ultimately, if you're not comfortable with that style, you will not make money. Even if it's 100%, having 100% winners, you won't feel comfortable. So ultimately you'll second guess. You'll try to, edit the way we enter or exit to meet your needs, and you'll ultimately fail. So you have to find what makes you feel comfortable. This is the Specialist Edge, the same edge that has sustained me now for 43 years. Hopefully, it will be able to do the same for you. Now, since this is an educational class today on our Saturday, I want you to ask me as many questions as possible. But we have a lot of people here today. This is a nice big class for a Saturday morning, so I don't want to take questions for every slide. Will be here far too long. So if you have questions, please wait till the end of today's class. The only question I will answer is the most common, and that is are we recording this? Yes, this is being recorded right now. So if you have to leave early or if you're having technical issues, a lot of times the students say, well, I couldn't hear or see the screen clearly. Many times it's your own internet connection. So if you log off and log back on again, many times that is corrected. But if you still can't hear or see, or if you have to leave early, each and every one of you will be sent a link to this recording, okay? So please remember, we have a good crowd here today. If you have a question, wait till the very end, probably in the next 20 or 30 minutes, then we'll take questions. All right, with that stated, let's begin today's presentation. I want to start off by a little bit of financial wisdom that my mentors taught me, and it fits in perfectly with the technique I'm going to be sharing with you today. One of the first things they taught me, because they looked at how I was trading and they looked at what I was listening to or what I was following. And I remember them saying right straight to my face, they said, Steve, it's the easiest thing in the world to overcomplicate your trading. And think of that. It doesn't matter if you've been trading for 20 years or 20 minutes. It does not take a lot of character to overcomplicate your trading. Anyone can do that. You can add as many indicators, you can look at as many signal services, you can look at as much fundamental news, you can watch as many guys on TV or go to as many trading rooms as you like. It doesn't take a lot of character to do that. Anyone can do that. But it is the most difficult thing in the world to simplify your trading. And when they said simplify, what they meant was to strip away, to let go of these things that are really what they called, in their words, useless noise. So what have I found to be useless noise for my personal trading? Well, it was listening to news, listening to earnings, looking at volume, looking at support and resistance, looking at overbought, oversold indicators. Trust me, I had been taught that those are the things that are going to make you a successful trader, just like everyone else, okay? And they didn't work at all for me. It was very difficult for me, once again, to grasp this concept. But once I did, that's when my trading became consistent. So this is one thing I want to share with you today. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify, okay? It's very hard. If you look, I often say this because I attend webinars as well to see what other people are teaching and see what other people have there. And if you look at a lot of webinars, so-called educational webinars, where someone's teaching you a brand new system or a brand new technique, most of all, these traders or these educators who are relatively new to trading, and that's anywhere from 5 to 10 years, it's still relatively new traders, their concepts and ideas are very complicated. There's a lot of indicators, a lot of convoluted logic, a lot of things you have no idea what they're based off of. But if you look at the traders who've been trading for a while, we're talking about decades, 30, 40, 50 years. Most of these traders' trading plans are extremely simple. Anywhere from 5, maybe 3 rules, tops, and that's it. Okay? And someone would say, well, why is it so simple? Well, it's because this is what sustains you. It's the simple things that work. We've all been taught that the more complicated your trading plan is, the more valid and successful it will be. But there's one thing I've learned over my 43 years, that it's the exact opposite. Those are the things that keep you from your success. It's the more simple trading plan you have, with the less rules, with the less indicators, with the less fundamental things you have to look at and try to figure out what they mean. Those are the things that are more successful or consistent. So have the courage to strip away the things that really haven't been working for you, and you'll start to become more consistent, okay? Now, you're going to see that today, because with the two requirements I'm going to be sharing with you today to combine the overall with the short-term trend, you're going to say, this is just too easy. But once you do the due diligence, you start to research it, you see for yourself, you'll say, wow, this stuff really does work. All right, so let's begin today's educational presentation. The first rule I'm going to be sharing with you has to do with the overall trend. So the first thing you want to determine, I don't care if you're looking at a 5-minute chart of the E-minis, I don't care if you trade Bitcoin on a weekly basis, I don't care if you trade currency pairs on a 4-hour chart. You have to determine first what the overall trend is, all right? And here's how we do it. This is the simplest but most powerful way to do that. If you get a buy signal, whatever you're trading, whatever time frame, whatever market, it can only be entered and generated above the 50-period simple moving average, all right? So whatever you're trading, whatever time frame, whatever market, you must have a 50-period moving average plotted on your chart. So as we look at this generic chart here, I specifically made it generic because I didn't want you to think, well, this only works for stocks, right? Or this only works for currency pairs. It could be any market. It could be a monthly chart that you're looking at, or it could be a 5-minute chart. It makes no difference. But most traders looking at this would say, well, God, Steve, I've been taught that this is a sideways market. We're kind of just going in no direction. So you want to stay away from this, right? Well, that's not really true, see? Because if you add the 50-period moving average, you have to ask yourself this: where is price in relation to that 50-period moving average? And as we see here, if price is above, what is the market telling you? Not some guy in a chat room, not some guy in TV, not some institution. What is the market telling you? It's telling you the overall trend is up. That's it. You don't have to look at a higher time frame if you don't want to. I mean, if you want to, you can. We're not here, as I often say, we're not here to tell you how not to trade. We're just here to share with you and teach you things that have stood the test of time. Remember, we want to keep it simple. So many traders always ask me, well, Steve, you know, I wait for these things for the short term to line up with the higher time frame, and it doesn't seem to work, or I wait and I miss a lot of trades. And I always say, well, then why trade that way? I don't use that. I mean, it's not required in any of our strategies or methods. All you need to do to determine the overall trend, you don't have to open up a weekly chart. You don't have to open up an hourly chart if you're intraday trading. Just apply the 50-period moving average. And if price is above, the overall trend is up. If price is below, the overall trend is down. As we see here in rule number 2, sell signals can only be entered below the 50-period moving average. Looking at this generic chart, once again, someone would say, well, Steve, this is kind of a whipsaw sideways market. Well, that's why most traders are inconsistent, because they don't listen to the market. What is the market telling you? If you apply the 50-period moving average, you ask yourself, and I would recommend writing this question down on a Post-it and posting it on your computer screen. Where is price in relation to the 50-period moving average? Whether you're looking at a 5-minute chart or you're looking at a yearly chart, it makes no difference. Where is price? In this case, price is below. So what is the market? Not me. I'm never going to tell you what I think is going to happen. What is the market telling you? It's telling you the overall trend is down. So that's all you need to know. You don't need to look, if you don't want to, at a weekly chart or a monthly chart. You don't need to do that. Why overcomplicate your trading by having 2 different time frames? There's absolutely no reason to do that. All right, so we know how to determine the overall trend now. It's that simple. Remember, I told you, keeping things simple is what leads to consistency, not making things complicated by having to look at different time frames. Now we need to know what the short term is telling us. So this brings us to rule number 2. All right, let's say our strategy, whatever it's based off of. Remember, we're only talking about overall time frame right now and short-term time frame. We're not talking about what method you trade. I don't care if your method is based on news or earnings. It makes no difference. But let's say we got a buy signal and we like to look at earnings, and our earnings estimates and our earning analysis says that it's in line, that this is a buy, and we look and we say, well, we're above the 50-period moving average, okay, but we also have to be in sync with the short-term time frame. So our buy signal must close in the top 25% of its range. Now, a lot of people have said, well, Steve, I'm not a technician. What does that mean? Well, let's say this is a bar where at the end of the day you come home from work and you see that the earnings estimates came out and that's what you thought. So you want to jump in and buy, but it first must close in the top 25%. So if you divided this daily bar or weekly bar or 5-minute bar by 4 separate but equal parts, if you closed in that top quarter, what is the market once again telling you? It's telling you that on the short term, it wants to go higher. So now, if this bar is above the 50-period moving average, you now have the short term and you now have the overall trend in sync. So as we look here, remember, we are above the 50, so the overall trend is up. And now we have a bar that closed right here in the top 25%. And look what happened. So the short term is in sync. Now, all of a sudden we have a sell-off and someone will say, wow, okay, well, this is over, right? The short-term trend is down. Well, not really, because what do we have here? Another bar closing on the top 25%. And look what happened. You see how you'll be in sync if you apply these 2 simple requirements. You don't have to look at a higher time frame. You don't have to look at higher highs, higher lows, or that concept. It's really simple. Trading is simple. It's just the trader, the individual trader, who makes it more difficult than it has to be. Now, the same thing can happen to the downside. Let's say price is below the 50-period moving average and you're waiting for the earnings to come out, and the earnings come out and wow, they're terrible. And you say to yourself, that's a sell signal, okay? But what if the bar closed in the top portion of its range? Well, you shouldn't sell then. What you want to do is wait, because sell signal bars must close in the bottom 25% of their range. I know a lot of you would say, but Steve, I want to sell at the high, right? Well, how many times have you sold when the bar closes at the high and it keeps going higher, right? That's what we're trying to avoid. We're trying to get the short term in sync with the overall trend. So if you get a sell signal, regardless of what it's based on, you want to see it close in the bottom 25%. Think of it this way. I often say this metaphor here, but it's the same thing because traders trade the same way. If you're at a trade station and you want to go from point A to point B and you're waiting for your train to come, and you see a train coming down the tracks, but it's headed in the exact opposite of direction of where you want to go. Are you going to get on that train? Most likely you'd say no, because it's going the opposite direction. Unfortunately, this is the way most traders trade. They want to buy or to sell something, and they'll jump on board when the bar closes in the exact opposite direction. So in other words, if you wanted to sell, you don't want to sell when the bar closes at the top. You want to sell when it's confirming and closing at the bottom. I know a lot of you are saying, well, why? That means I'm going to sell towards the low. Yes, but remember, when a bar closes in the bottom 25%, I'm not saying this. Some guy in a chat room is not saying this, but the market is telling you it wants to go lower on the short term. So now you have a higher level of consistency because the short-term trend is in sync with the overall trend. So let's look at this example here. We are below the 50-period moving average. Here's our signal here. We have a bar closing in the bottom 25%. Let's say that's when the earnings came out. I know a lot of you would say, well, Steve, I would have done much better selling up here. But remember, there is no guarantee that it's going to reverse the way it did right here. How many times have you sold when a bar closes and it keeps going higher, right? We want to have this consistency where the minute you get in, it goes lower, okay? Although it's not guaranteed, you're putting the odds in your favor. This is what it means to be consistent. This type of trading, these type of simple rules are what will sustain you. Not trying to buy at the very low and trying to sell at the very top. Sure, that feels great when we all do that, right? But how many times have you really done that? How many times can you consecutively say, oh yeah, I always buy at the low and sell at the top? I mean, it's, I've been trading for 43 years and very rarely am I able to do that. What you want to do is see that the train is leaving the station in your direction and you just jump on board. That's what will sustain you, okay? And that's what we're trying to do. We're trying to teach all of our students around the world techniques, methods, and strategies that have stood the test of time, that will be able to sustain you, not for just a couple of maybe a months or maybe a year, and you say, wow, I had a great year using this fly-by-night system, and then the next year you give it all back because nothing works, right? Remember, I used to teach systems years before, and they had tremendous research and back testing and results where this worked. People would say, wow, the back testing goes back 20 years and this stuff has an 80% win-loss ratio. The drawdowns are so small. And guess what? When the market changed in 2008, all of those systems all of a sudden lost everything. I mean, everything. They went to zero. They lost all the money they had made. So that's why we don't put a lot of faith in research and back testing, because when the market changes and the system stays the same, well, that's when everything goes out the window and that's when you give it all back. So you have to be a part of the process. You have to learn how to listen to the market and be able to shift and adapt with it. That's what will make you a consistent trader. That's what we teach, okay? Now, guess what? What I taught you right now, the overall trend in sync with the short-term trend. I know a lot of you would be like me. I mean, when I was taught this by my mentors 43 years ago, I said, this is silly. This is too simple, and it's not going to work, okay? And I'm going to be buying at the high, and I'm going to be selling at the low. I don't want to do that. But guess what? When I went back and researched on my own, I said, wow, this kind of stuff does work. Over time, I saw that most of my losses were because I was buying below the 50-period moving average and selling above. And then when I did get a signal, I was out of sync with the short term. All right, I would be buying when the bar closed at the very low, or I'd be selling when it closed at the very high, and then it would keep going in that direction, like that train leaving the station. I would get on the wrong train. So go and do the due diligence. Go and research for yourself. I don't want you to just say, well, this guy must know what he's doing, so I'll just blindly follow along. Remember, that's not our goal. Our goal is to teach you so that you can fully understand this process. And we always want to teach you something and not just say, well, in order to learn, you have to spend $10,000. So you'll get all the rules once you spend $10,000, the way so many other so-called educators do. That's not our goal. Every educator does that except us, because our goal is we want to really teach you so that we can have you trading for decades, not just a couple of months. So go back and do the research. I'm sure you'll find that, wow, this stuff really works. In our webinars, we always want to teach you something so you can see for yourself how well it works. And even if you decide not to become a student of ours or a member of ours, that's okay. At least you left the webinar with some education. That shows the good faith we have in really trying to educate you. So you just learned these two requirements for determining the overall and the short-term trend, how to keep them in sync, how simple they are, how you don't have to overcomplicate things by looking at an hourly chart if you want to trade the 5-minute bar, by looking at a weekly chart if you want to trade the daily bar. There's no reason to do that. You can if you want to. I'm not going to stop you, but I stopped looking at that years ago. You can look at news if you want, but there's no reason to. I'm living proof that you don't need to do that. I stopped looking at news 4 decades ago, and I'm still here. So why overcomplicate things? There's no reason to follow the institutions. I know that's a big thing now. The institutions must know what they're doing, right? They're never wrong. They have the tons of money behind them. Well, I stopped listening to institutions decades ago, so I'm still here. There's no reason to overcomplicate things and to follow other things. The only thing you should be following is the chart in front of you. That's our goal. Now, guess what? The 2 requirements I just shared with you make up the first 2 rules to one of our most consistent methods. That's strategy number 4. This was a method that was taught to me, the first method taught to me by my mentors, once they taught me the exact same way that I just shared with you, the requirements. And this is a strategy I still use to this day in my own personal trading in some capacity, okay? Let me give you a few of the highlights of this particular method. It's a pattern recognition strategy. You just learned the first 2 rules of this pattern. It's designed for traders looking to catch momentum, and it really has an uncanny ability to catch momentum oftentimes when it looks as if there's no momentum. And you'll see that in the examples I share with you in a few minutes. It only uses one indicator, and you already know what that is. It's the 50-period moving average. You see how simple this is? Now, there's only 4 rules to this strategy. I've already given you half of them. I'm sorry, I'm going to share with you a lot of examples of strategy number 4. I cannot give you all the rules. It wouldn't be fair. We have thousands of students around the world in over 115 countries and in every state in the United States trading strategy 4. It wouldn't be fair to them that have spent good money on strategy 4 for me to just say, hey, here's all the rules for free. I can't do that, but I've given you half of them already. So if you have any type of experience, you'll be able to use these 2 rules and really take your trading up to the next level. Now, let's look at the process that we have developed for trading strategy number 4. Because remember, we know that not everyone has 20 years experience. We know that not everyone went to grad school and learned all about economics and learned. I didn't. When I first started trading, I didn't even know what a stock was. So I wanted to develop something that I knew would have really helped me when I first started trading, because I had no idea about anything. I didn't have an economics degree. I didn't know anything about the stock market. I went on the trading floor as a summer job. So I had no idea what was going on. And I wish someone would have taught me the same way I want to teach you. And the easiest way to do that is by what we did. We developed, Pro Trader Strategy and myself developed your own personal mentor in the form of the PTS Primo charting platform. This is the educational platform that automatically generates these strategy number 4 setups, but also teaches you what to look for. So it's like having your own personal mentor right there with you, because everything is one click away. Over 4 decades of information right here at your fingertips. So here's the process you would be following if you're looking to apply these 2 requirements and looking to see what these strategy number 4 generated signals are. All right, let's look at this chart here in JD. All right, once again, someone looking at this will say, wow, see, sideways chart here. It's a range market. You know, that chat room I go to says stay away from this kind of stuff, right? Because there's no clear-cut trend. Okay, how did I just teach you how to define the overall trend? The first thing we want to do is apply the 50-period moving average. Now, on our platform, we call that the buy-sell line, because it tells us whether we're going to be a buyer, whether the overall trend is up, or we're going to be a seller. And we specifically put that in place right here in the far left-hand corner of our strategy tab. This green strategy tab, also all our techniques, all of our strategies, all of our methods. You start in the far left-hand corner, click on buy-sell line, and you'll see a drop-down menu appear. Now, there are 4 different ways to approach the buy-sell line. Let's click on the easiest, which is the 50-period simple moving average. Click that on, and now ask yourself, where is price in relation to that 50-period moving average? It's above, right? So automatically you know where everyone else is saying, well, this is a range market. We kind of have to avoid that, right? No, the overall trend is up. So even though, sure, we've been going sideways for the past 2 weeks, the overall trend is still up. We should only be viewing this from a buyer's point of view. Now, we want to see what the short-term trend is. Now, how do we define that? By finding bars that close in the top 25% of their range. And guess what? We found 4 right here, right? So the short term is in sync with the overall trend. Now, we apply the remaining 2 requirements of this pattern with strategy number 4, and we think that we found some buy signals here. How do we check our work, though? I mean, you can't call me up or email me every 5 minutes you're looking at a chart and say, Steve, just verify, is this a valid signal? I mean, I would be, not able to sleep at night just constantly answering our questions from our students around the world. So that's why we developed the platform as an educational tool. It's a learning tool to check your work. So let's say you've taken the course rules, you've figured out how to determine what a strategy number 4 signal is, how to check your work. Well, you click on strategy number 4 in our green strategy tab, click on signal arrows, and arrows will appear underneath the bars that are valid signals. And guess what? You're correct. These are all valid signals. You see that the overall trend is up, the short-term trend is in sync with the overall trend, and the remaining 2 requirements have been met. So these are all valid signals to go long. And someone would say, but nothing has happened, Steve. Sure, I mean, nothing always happens right away all the time. Sometimes you'll see in some signals I'm going to be sharing with you, it happens on the very next bar. Sometimes you have to wait. But guess what? What if you had viewed this as a range the way we initially said and said, well, Steve, we're at the top of that range. I'm going to sell here. How well would you have done in the remaining 2 weeks coming into the middle of October? You would have lost, right? This is why most students lose. You're not listening to the market. You're waiting for an earnings report to come out. You're listening to some guy in a chat room. You only have to keep things simple by listening to the market. The trouble is we're usually never taught to listen to the market. We're always taught to listen to what some guy's saying on TV, what some so-called guru is telling us what the market's going to do. Remember, keep your trading simple. Learn how to listen to the most important thing, which is the source. That's the chart in front of you. All right, let's look at this older chart in the spiders, okay? Most traders would say, hey, Steve, higher highs, higher lows. We're in an uptrend, okay? We've got to be buying this. I want to be long. The market looks like it's going to go higher, all right? Well, what did we just teach you? Apply the buy-sell line. Click on the buy-sell line. That will tell you if the market wants to go higher, if we're in an overall uptrend or downtrend. Click on 50-period simple moving average. Now, we had 1 bar close above. That's not enough, and we close quickly down below. All right? So the overall trend really is down. I don't care if we've been going up. This is just a selling opportunity. And what do we find here? We're looking for bars for the short term, bars that close in the bottom 25%. Well, we don't have any until right here. And guess what? After taking our course, you think that may be a valid sell signal. So how do you check your work? Well, click on strategy number 4, click on signal arrows, and if we're correct, there should be an arrow above that. And there is. There's a red arrow above that. So that's a valid sell signal. It met all the requirements, the 2 rules that I just taught you today, and the remaining 2 rules. So it's your choice whether you want to sell this or not. Remember, we're not a systematic company. We don't tell everyone that they have to take this trade. It's up to you. You're in charge of your own trading. But that would have been a wise decision because in the next 2 weeks, the spiders fell 12 points. And guess what? If you didn't trade that, that represented 1,100 points to the downside. So you could have used this as a market directional tool as well. So now that you understand the process, you see how simple it is to apply this on our platform, which we developed specifically to teach you what to look for. Let's look at some recent strategy number 4 signals. Remember, they are incorporating the 2 rules I taught you, how to define the overall trend and how to define the short-term trend. All right, we have here in Qualcomm, price above the 50-period moving average. 3 bars here closing in the top 25% that meet the remaining rules of strategy number 4. A quick 18 points coming into this past week in October. All right, someone looking at this and Gil would say, well, Gilead, or Gilead, however you want to pronounce it, this is a sideways market. And on top of that, that $10,000 course I took says that there's major support here. This is where all the institutions are buying. So, Steve, I can't go against the big money, right? Well, we don't listen to what the institutions or anyone else is telling us. That's what leads to our being inconsistent. What is the market telling us? Now, if they're in sync with the institutions, great. But if they aren't, we're not going to listen to anybody else. The market went down. So what happened to all the great institutions? I used to trade with the institutions. When I was making markets on the floor of the stock exchange, they used to give me their orders. And trust me, between you and I, they had some of the worst track records ever amongst traders I traded with. So I would no less put my faith in the institutions than in someone who'd been trading for a couple of weeks. I put my faith in what the market's telling me. That's the source, okay? So what is the market telling me? Well, if I apply the 50-period moving average, it was telling me all along the overall trend was down. So that's all I needed to know in the first place. And then look at all these bars that close in the bottom 25%, okay? Here, here, here. Look at all the short term telling me it wants to go lower. Now, if we apply the remaining two rules of strategy 4, do you think it could have made some money here on the short term? If I had taken this very first signal here and held it on to this last week in October, well, gosh, that's 7 points to the downside. This is an inexpensive stock, so I could have made some nice money there. Now, here's a more advanced way to look at this, but once again, we have one close above and then one quick close below, and it was a valid strategy number 4 sell signal. Now, remember, I said in the opening statements that we're trying to teach you how to be a consistent trader. I'm not trying to tell you that every trade's going to be a winner. That's silly. I mean, I've been trading for 43 years, and I would venture to say that I have just about 1 or 2 losing trades every day because I like to trade intraday. But what makes a consistent trader is one that has a method that's able to recoup those losses. That's what we're trying to instill in you. Now, if you had taken this sell signal, if it fits all the requirements, the short-term trend is down, the overall trend is down, and then look what happened. Well, it didn't work. Nothing works 100% of the time. And most likely, if you used one of our generic stop placements, you would have lost 5 points. But remember, consistency is the ability to make back those losses. And look what happened on the very next setup. Here was a buy signal using the rules of strategy number 4. Had you quickly reversed, well, you could have made back that loss. So this is what we mean by consistency. I'm not going to sit here like a lot of other webinars tell you, other so-called educators, and they say, oh, this works 90% of the time. It hardly has any losses. We only had 1 loss this past year. I mean, that's silly. Losses are inevitable, and losses are okay. There's nothing wrong. What is wrong is when you have a method that goes into a series of long drawdown losses. We don't want that. We want to be able to recoup what we just lost. And all of our methods are highly consistent. Here's an example in ALGN, okay? We are above the 50-period moving average, so the overall trend is up. Rule number 1. Rule number 2, we want to look for a bar in the top 25%. Well, none of these close in the top 25% until right here. So there's rule number 2. The short term and the overall trend are in sync. Now the remaining 2 requirements were met, so a buy signal was generated, and look what happened coming into this last week in October, 25 points. Trading is simple if you get out of your own way, meaning if you release all of this so-called conventional wisdom that's supposed to work but really doesn't. All right, this is the way we're all taught. Steve, this is a downtrend, right? This is a clear-cut down. Look at all the closes that are lower on the day. The market's telling us it wants to go lower, obviously, right? Well, let's apply the overall trend tool, the 50-period moving average. Price is above the 50-period. So even though we've had a sell-off, this is actually a buying opportunity. This is why you don't want to buy at the low. Because what if we had bought at the low of this bar right here or the low of this bar right here? Do you see how we would have lost money? Remember, that's like getting on a train that's headed in the wrong direction. You don't want to buy when the trend is going lower for the short term. So we want to wait for the short term to be in sync with the overall. So far, the short term is not in sync until we get to these 2 bars. What is it telling us? It's telling us that we are now pretty much getting in sync with the overall trend. And guess what? These 2 bars generated buy signals. So do you see how you have a buying opportunity when the short term is in sync with the overall trend and ultimately 33 points? You see, this is why most traders fail. They're not in sync with the 2 powerful techniques I just shared with you. All you need to do is apply the 50-period moving average, whatever time frame, whatever market, and look for bars that are in sync with that 50-period moving average. As we look at VRTX, we see here we have a valid sell signal below. It's a little bit tough here because it's more advanced. We're crossing above and below. But if you had a wide enough stop using this technique, ultimately you could have potentially captured 47 points. All right, here's the opening chart we started off the presentation with. Remember we said, Steve, we're in an uptrend, right? Higher highs, higher lows, and then this happened. So the uptrend was broken. You got stopped out. You lost money. This is why most traders fail, all right? How did we teach you today how to trade this? First thing you want to do is apply the buy-sell line. Click on 50-period moving average, and you would have seen that the uptrend was never broken. The overall trend was up. But look at, you bought here on a bar that closed in the mid-range or bottom portion of its range. And it didn't meet the remaining rules. Neither did this bar. So there's no reason to buy here. It didn't meet the short-term time frame until we get to this bar right here. It closed in the top 25%. Now, just because a bar closes in the top 25% and it's above the 50-period moving average doesn't tell you to buy at the market. But the market is giving you a clue that we're getting close. And if the remaining rules of the strategy are met, well, then yes, this is a buy signal, okay? And as we check our work, signal arrows, we see that yes. So we could have bought here. Now, a lot of students will say, but Steve, look what happened on the very next bar. Well, you're not stopped out yet using our standard stop placement. You're still in the trade, and ultimately, the stock gained 30 points. Now, I know a lot of you are saying, well, yeah, but Steve, but where do I get out, okay? Because as we all know, trends will change. And had we stuck into this trade too long, we would have given back a good portion of our profit. Well, later on, I'll share with you how you could have actually exited right here, almost at the very top of that little run. Now, here's an example in MVDA. We were above the 50, 2 bars closing in the top 25%. The remaining rules are met, and look what happened. Now, remember, here's a bar that closed in the bottom 25%. If you're trying to be slick and say, well, I'm going to buy at the very low, look what would have happened. Had you held on for another couple of days, most likely you'd scare yourself and say, gosh, I'm losing too much money here. I'm going to exit. Just at the very point the market is telling you it's getting ready to go up. So that's why it's always best just to wait for the short term to be in sync with the overall trend. All right. Here's a great example of how and why most traders fail. Most traders would look at this, myself included, when I first started out. This is going back to May of this year, saying, well, there's no clear-cut trend of what's going on here. We go up, we go down, we go up, we go down. Most likely I would buy right here, and then I'd get stopped out, so I'd sell, and then it goes right back up, so I buy again, it goes back down, right? Look familiar? And this is why most traders fail, and they say, well, I'm not going to do anything, and then this happens, right? And they say, how come I'm always a day late and a dollar short? I always miss these things. I never knew that this wanted to go up. It was in a sideways range, and I was getting whipsawed. But if you applied the overall trend tool, the 50-period moving average, you would have known well in advance you shouldn't be selling this. And the market was telling you, not me, not some guy in a webinar, not some guy in TV, not some institution. The market was telling you way back here in May, the overall trend was up. And all you have to do next is look for bars that close in the top 25% to be in sync with the short term. Now you just have to add some more structure in the form of strategy number 4. And look at all these buy signals that were generated. Had you taken the first couple of ones down here and held on coming into October, potentially you'd have a 125-point gain. But even if you missed that, look at all the nice buy signals that were generated here along the way. Here's some sell signals in ILMN. Okay, 2 sell signals here, another one here. We're below the 50. They all close in the bottom portion of their range. 90 points in just about 3 or 4 days. Here's a little bit more advanced trade in Amazon. As we see, we're above, we're below, but we're back above. We close in the top portion. 300 points in 3 days. That's a little bit more advanced trade, but we teach you what to look for in these advanced situations in the course. All right, so let's look at some different time frames. I know not everyone trades daily bars. Here's a weekly time frame of Halliburton going back, okay? We're below the 50-period moving average. We see all these bars that close in the bottom 25% of the range, and look at all the sell signals that are generated when we add the remaining 2 requirements of strategy number 4. How about PSA? Once again, this is a range market. There's not really much you can tell here, and plus the institutions are all selling, so this is resistance. I want to sell right here at the very top. I'll get a really good price, and then it'll come straight down. I'll make a lot of money, right? Sound familiar, right? I used to trade that way until my mentor said, listen, Steve, what is the market telling you? What is the overall trend? Well, we had the 50-period moving average. The overall trend is up on this weekly time frame. So why would you sell if the overall trend is up? And then looking at the short-term time frame, look at all these bars that close in the top 25%. So we look to see if there are signals here, and there was one right here. So why would you be selling here when a buy signal was generated? You could have been long, and there was another one buy signal generated right here where you were thinking of selling, and look what happened, 30 points in the next month or so. Now you can also apply this as a market directional tool. In other words, you can apply it to ETFs or indices to tell you what most likely that market may be doing. For example, here's an older chart in the spiders. Even though we've been rallying, where is price? It's below the 50. We had 1 day close above, not enough, and we're right back down again. Now look what happened. We closed in the bottom 25% and we are below the 50. This entire time we were going up, we closed in the middle to top portion. So there's no reason to sell. We only want to sell or think of selling when we close on the bottom. Now the remaining two requirements were met of the strategy, and the spiders fell 27 points. That was comparable to 3,200 points in 3 weeks drop in the Dow. Now, if you don't trade the spiders, that's okay. You could have seen that there was a sell signal in the spiders, which represents the S&P 500. So wouldn't that be a good sign that the market's most likely going to go down? This is a great way to tell what the market's going to be doing if a signal is generated, or by just looking at the two tools I taught you today. Okay, so let's recap. Remember, in order to determine the overall trend, the first rule is apply the buy-sell line. What is the buy-sell line? It's the 50-period moving average. If price is above, the overall trend is up. If price is below, the overall trend is down. Now, if we want to determine what the short-term trend is to be in sync with the overall trend, apply the top-bottom 25% rule. That's looking for bars that are above the 50 that close in the top 25%, or if they're below the 50, in the bottom 25%. Now you have the short-term trend in sync with the overall trend. You see how simple this is. There's absolutely no reason to look at a higher time frame. There's no reason to listen to some guy in a chat room. You have the information now here in front of you. Go back and do the research. Go back and see if this would have helped your trading, any of the signals you had that are out of sync with this. Now, these are the first two rules of one of our most consistent methods, strategy number 4. I've been trading this on a daily basis for the past 4 decades. It's my favorite strategy, strategy number 4. You know the first two rules of it. And we made trading strategy number 4 simple by developing the PTS Primo charting platform. Everything is one-click access. It's 4 decades of information right there in front of you. Now, ask yourself, do you think this trading pattern, these two rules, can help your trading starting in 2021? How about starting next week, okay? Once again, go back and check your last 10, 20 signals of whatever strategy. I don't care what it's based off. It could be based off news, could be based off some other webinar you attended, some $10,000 class you took that is based off the institutions. It could be based on the full moon. I don't really care what it's based off of. If you applied these two rules I shared with you today, I can almost guarantee that most likely you were out of sync with them, and that's why you had losses. Guess what? We have a great discount for all the attendees today. We want to thank you for taking time out of your Saturday morning. We're going to offer you strategy number 4. Now, don't be fooled by the graphic here. It says stock strategy. I know that, but trust me, when we first started teaching this, I was taught this, method some 4 decades ago on the floor because I used it for stocks. That's where my background is, in trading stocks. But trust me, we have students that use this on E-mini futures. I use it intraday trading E-mini futures. We have Bitcoin traders that trade this. We have currency pair traders that trade this on a 4-hour chart. We even have commodity traders that trade strategy 4. So don't be fooled by the title. We just haven't changed the graphic yet. You're going to get instant course access, detailed instruction. You will learn all the different entries, all the different exits, and all the different stop placements. Remember, as an educator, we want to give you all these different variables so that you can decide what makes you feel the most comfortable, okay? Now, remember we shared with you how easy it is to apply this on the PTS Primo charting platform. We're going to give you 6 months of the platform. Now, that's going to cost you $1,000 normally, but we're not going to charge you that. We're going to throw in 6 months absolutely free. You're going to get 6 months of our platform free. So you're going to not only get strategy 4, but let me share with you what else is included in that. You're going to get the 4 different features for applying the buy-sell line, okay, along with strategy 4. You'll get our strength of trend tool. This is a tool I developed with Pro Trader Strategies that has an uncanny ability for telling you many times when a momentum move or a trend is running out of steam or not, to the upside or to the downside. It's a great, great tool that you can start applying. Over 90 of the most prominent technical indicators along with personalized tech support. But let me share with you these two features that I believe are worth their weight in gold. The signal scanner along with our proprietary exit levels. Now remember, we know that not everyone is able to be in front of your screen every day. So we've provided these signal scanners if you happen to come home from work or if you like to intraday scan. It's as simple as just clicking on the strategy number 4 drop-down menu. Remember before you would click on signal arrows? Well, now all you have to do is click on scan and you'll see this page appear. It's as simple as just clicking on load symbols, and we provide you with symbol lists from all the different exchanges, different markets, and whatever one you decide to choose automatically appears in seconds, okay? It could be an intraday market scan, it could be a daily or a weekly, it makes no difference. Now, just click on scan, and in a matter of seconds, you'll see green horizontal bars and red horizontal bars. The green horizontal bars means there's a buy signal in the corresponding market. The red means there's a sell signal, okay? So let's look at this chart. This was on the 7th, a couple of weeks ago. You could have scanned for TMUS, okay, T-Mobile. And you would have seen that there was a buy signal generated. Now you see here, we're above the 50, the first rule I taught you, the overall trend is up, and we closed in the top 25%. Now remember, this bar closed in the top 25%, and I believe this one did as well. But they didn't meet the remaining 2 requirements of strategy number 4. So we teach you what to look for in the course. You could have checked your work and said, yes, this is a valid signal. Now, what a lot of students do is say, well, Steve, I'd like to know what my exiting options are before I get into the trade. Okay, great. Now we give you upwards of 7 different exit methods. Here is one that is auto-generated on our platform. All you have to do is click on, once again, the drop-down menu, click on range extension exits, and they automatically appear. Now, if you're the type of trader that likes to get in and out quickly, you could use these first 2 levels right here, okay? If you're the type of trader that likes to stay in a little bit longer, maybe you're a swing trader, well then use these other levels. The only thing we suggest is that when you get to this 4th and final level, you exit entirely. Why? Because most likely the trend will change. So let's say you're the type of trader that wants to get his most bang for your buck and you say, you know what, I have a strong feeling due to my analysis and my strategy or the way I like to trade that it's going to get up here. So you place a limit right here. Remember, you can place it anywhere you want. It's up to you. Maybe you want to sell a portion of your position right here, maybe a portion here, maybe all of it right here on the 3rd one. It's up to you. Maybe you want to, when you get to the 1st level, well, maybe you'll move your stop to where you entered. When you get up to the 2nd level, you just continue to raise your stop. There are a million and one ways to trade this. Remember, you are in charge, not us. And this is just one of our exit methods. We have 6 more that you could choose from. But this one is auto-generated on the platform. So let's say you decided to get out right here. Well, in just 4 days, you would have exited with a nice 8-point gain, and then look what happened. See how the trend changed? Now let's look at that original chart we looked at once again, Adobe, okay? Another buy signal was generated right here. You could have scanned for. It met all the requirements, the 2 rules I shared with you today. Now, if you wanted to first know where to exit, well, look at it. We gave you 4 different exits. Once again, had you exited right here, that would have gotten you out with 30 points in 1 week. And then look what happened, okay? This is all included, the scanning as well as the auto-generated exit levels on the platform. You're going to get that free for 6 months, okay? So let's break this down, what this great offer is for all of you today. Our strategy number 4 special. Normally, 6 months of the platform and all the rules and the educational correspondence with yours truly, along with the the entries, the exits, and the stop placements. Complete course rules would normally cost you close to $1,700. We're going to discount that close to $1,000 today and only charge you $695. That's it. And if $695 is still too difficult amount for you to come up with, we'll offer you payment plans. So for a small discount, a small deposit, I should say, you'll be able to be up and running on this great discount. You can still be up and running as early as today. Now, this also includes, remember, 6 months of the PTS Primo charting platform included free. This is a great, great way to take your trading to the next level. So here's how to take advantage of this. Contact Pro Trader Strategies. I developed the courses with them. I developed the platform with them. They're in charge of all the tech support and all the pricing. I would, if you have any questions about tech support or if you have questions about pricing, give them a call right now at area code 310-598-6677. They're not going to sell you anything if you don't want to. If you want to think about it, they're just there to give you some quotes. If you want to put together a payment plan, they would be more than happy to give you a quote over the phone and work with you to meet your needs. Now, that link you see at the very bottom is the link that will take you to the more informational page as well as the sign-up page if you'd like to sign up online. Now, that's not a live link, but a live link has been posted on the chat box on the far right-hand corner. So if you want to click that on, it will take you to the sign-up page. Now, I promised you I would answer your questions at the very end of class today. So if you have any questions, just go to your question and answer box on the far right-hand corner of the GoToWebinar column and type them in, and I will answer them to the best of my ability. Okay, I'll open up that right now. And someone is asking if you could please paste that link here. Yes, the link is right there on the chat box. All you have to do is click that on, and it will take you to the sign-up page. Okay. Remember, that's the informational link. A lot of people like to sign up online, but if you don't like to sign up online, you can just simply give Pro Trader Strategies a call. They would be more than happy to take your order over the phone. And on top of that, if you wanted to get a quote for a payment plan, you can do that as well. Someone asked this question, does it work well with TradeStation on a Mac? It does. You can apply it for TradeStation, but remember, if you're going to apply this with any other platform, remember, such as Metastock or MT4 or NinjaTrader or Thinkorswim, remember, you're only going to see the up and down arrows. That's it. You won't get the scanner on Thinkorswim or on TradeStation or on Metastock. You won't get the auto-generated exit levels. You won't get that strength of trend tool. You won't get the tech support because that's the only thing we're applying with the other platforms is the up and down arrow. So yes, you can use it with a Mac. There are a few things but our tech support will help you with. You can use it with TradeStation, but you're not going to get the scanning ability and the other. You have roughly 4 decades of information that have accumulated on the platform. We have so many more tools and techniques and methods to help you that I didn't even touch yet that are on the platform that you have one-click access to, that you won't get that with TradeStation. So I would really suggest using this with our platform. You're going to get that for 6 months anyway, and then transferring that over when you want to enter an order, just click on TradeStation, and then enter your order through that. Okay, that's the way a number of our students like to use this. Someone asked this, can this be applied for intraday trading? Yes, it is. It can be. I'm sorry, I didn't use a lot of intraday trading examples there, but I am an intraday trader, okay? Because that's my background. I used to trade on the floor, and I would be in and out of trades in like seconds. So that's my background, and that's the way I've stuck to trading. But trust me, I still use it for intraday trading as well. So you can apply strategy 4. Also, you can apply strategy 4 for weekly bars. You can apply it for monthly bars. It makes no difference. We have a number of students who like to use it on commodity trading. So it makes no difference what market, what time frame, or what direction. Okay. Does this? Are there other ways to apply this with a win-loss ratio? Do you have a win-loss or win-reward ratio? Well, remember, you can only get win-reward ratios or win-loss ratios, or you can only get statistics if everyone is required to trade the exact same way. All right, that's the only way you can get these type of background statistics. And I don't know if you came in late, but I told you that I had traded systematically before. I had taught systems before. And trust me, I had win-loss ratios, win-reward ratios going back 20 years that were phenomenal. And when the market changed, all these systems with phenomenal statistics lost money. And they didn't just lose a little amount of money. They lost everything. In other words, the system blew up. So I don't have a lot of faith in win-reward ratios. I don't have faith in worst-case scenario drawdowns because you have to be a part of the process. That's what we said in the very opening. You have to make your own trading decisions. And when you're listening to a system that has statistics that tells you how to trade, everyone to trade the same way, you're basically taking yourself out of the game. Our credo is no two traders should ever trade alike. That's a recipe for disaster in our opinion. So if they are trading alike, then yes, you can get win-reward ratios. But we don't want you to trade alike. So everyone should trade according to their own means. That's why, as our job as educators, we provide you with all these different variables, all these different options, and then you decide how you want to enter. We have entry points for very conservative traders. We have entry points for very aggressive traders. We have stop placements for people who don't like a lot of risk. We have stop placements for traders who like a lot of risk, who don't mind. So if everyone were to trade the same way, they'd all have to place their stop at the same place. They'd all have to enter at the same place. And we don't believe in that, so you have to trade according to your own means, okay? Yes, everyone, if someone's asking the most common question I answered at the beginning, and I realize you came in a little late, yes, everyone will get a link to this recording. We'll all be sending this out to you later on today. So great questions, but as we get ready to close up here, remember, I want you to watch this recording at your own leisure as many times as you like. But remember, this offer is only for, I believe, a limited time only, probably about 48 hours. If you take your time and you watch this video for the next week and say, you know what, gosh, I've had so many losses this last week, I'm going to take Steve's advice and I'm going to sign up for that great offer. Well, most likely that offer will be gone. It'll be back up to $1,700. So we're not trying to force anything on you, but if you're serious about this, listen to the video for a while, but make a decision quickly because, you've just seen a number of examples that some of them are only just a few weeks old. So, this is something that's very valid. A lot of webinars I've attended in the past, they'll show you great examples, great, trades. And then you look at the dates that are like 6 months ago or a year ago. I like to show things that happened within the last week. Some of the examples I share with you happened within the last couple of days. That's why we want to share that with you, because we want you to see that this is happening over and over again. But remember, our edge is consistency. Consistency does not mean that every trade is a winner. I showed you some losses. That's okay. But as long as you have a method that's able to recoup those losses, you will be consistent. And that's what we're trying to instill in you. I do not win on every trade I have. That's okay. I have the confidence in knowing that if I take the next signal, oftentimes I'll recoup what I lost. So that's what you want. You want a method that is consistent. Anyone that promises the world that says, we never lose, we've only had one loss maybe in the last 10 years, or this is amazing statistics, they're phenomenal, I would be very wary of following that, because most traders know, who are worth their weight, and who have been trading for a while, know that there's nothing wrong with taking losses. What's wrong is when you have a method that promises the world and does okay, but then gives it all back. That's really not a really sound fundamental strategy. It's more of a gambling strategy or a gambling system. Because gamblers, as you see, they'll do great and then they give it all back, right? We don't want to have you trading like a gambler. We want you trading with a nice 2-step forward, 1-step back approach. And all of our methods have high levels of consistency. So come on board, have me as your own personal mentor. You'll get one of the things I didn't mention, you have my own personal email address. Once you become a student of mine, you can contact me with questions whenever you like, and I will try to answer them as soon as possible, okay? I was answering emails before we even started this webinar today. So come on board, be a student of mine, and learn how to trade strategy number 4 with these 2 techniques I just shared with you today. As we close up here and look at one last disclaimer slide here, I just want to say thanks for taking time out of your Saturday. I really wish you the best of luck. Go back and research these 2 rules that I share with you about determining the overall trend with the short-term trend. See if they would have any validity with your last couple of trades, and I'm sure you'll see that they would have. And then contact Pro Trader Strategies. They're there to help you. They're not going to try and sell you anything. If you don't want to, they'll give you a quote on setting up a payment plan if you like, okay? Thank you so much for attending. I wish you the best of luck, but most importantly, I look forward to all of you becoming students of mine in the Strategy number 4 course. Have a great weekend. I'll see you next time. Bye-bye.